And every week I kind of have like a core focus of what we're studying and what I cover that week. And then we use the live markets and we look for live examples of it and you get to see how the market is really playing out. So this is like a home turf for me. I started out with a trading room back in the mid 1990s and really kind of grew up teaching other traders live. So I hope you enjoy this session. This is the first time I've done the live session here with David, but I'm excited to be doing these again in the future with you guys as well. So I'm just going to start with the trade that I just got out of. Actually, there were two of them. Um, as you guys were listening to our previous presenter there, I am primarily a futures trader these days just because I change how I trade according to where I'm living and what hours I'm trading and what my life schedule is like. But I'm a technical trader and I'm a purist, so I don't use a lot of indicators on my charts. I don't pay much attention to news or what is actually the drive behind a move. I pay attention to what the reaction is. So the psychology of the market is reflected in our charts. And even as you're going into events, we often see how they're going to end up playing out just because of the way that they're forming heading into a news event. We see this with earnings, we see this with the Fed announcements. Um, One of the markets that I really like to trade are the type of markets that we're having right now, where we do have a lot of volatility. I started out as a swing trader. So of course, I love, kind of falling back on that to some degree. In fact, last week, let me pull up my NASDAQ chart here. And you guys can see what I was primarily focusing on that. And then we're going to come back here to this intraday because this is really key to what's going on here. So here's our daily chart of our NASDAQ, and this is the micro. I have a lot of my traders starting out on the micros these days. And what we were dealing with was a two-wave measured move. It hit the measured move right in here, and it had broken the trading channel right here, just only a little bit. It just kind of flushed it. And so as we were coming off of our highs over there, what we were looking at were, a couple of potentials. If it made it up but didn't quite hit that trend channel, then I was looking at a greater possibility of a really strong third continuation move. But since it just flushed that channel on the upside there, what we were looking at instead was just coming in and basically kind of taking out these lows and going into more of a chop type of move. And so over here, we started falling into a megaphone. And what I've been playing over the course of the last week was just this upside move, but it's been a really choppy move. And the reason for that is because of how extreme our momentum was on the downside. So what we often see following these bouts of extreme momentum are these widening up zones. And it's in there that we can get a lot more of the back and forth action. So I've been playing a lot of those bigger intraday moves that have been going on the upside until, of course, the last couple of days. But just looking at each of these pullbacks, and what's been really exciting about the market is that as we've been coming off of these lows, we've been seeing essentially the same patterns playing out over and over again on the smaller time frame. And what that pattern looks like is you can see it really pretty clearly in here. We end up getting these kind of shifts in the momentum following our leg of downside. We get a pop up, we get another shift, and then we get the upside move. Here we have our news coming in and kind of creating a flush in there. But this is the pattern that we've seen over and over and over again in the current market and again today as well. And it's one that as long as we're really in this higher volatility market, we're going to continue to see it a lot. So if I drop down to the smaller time frames that I was playing here this morning, I'll even go over, we'll start over here on our 1,000 tick. So the first thing that is really apparent here on our 1,000 tick is that we started with some pretty strong momentum as we were heading into the weekend. And then we've really been shifting here as we came into the lows this morning. And in particular, we had this measured move where we've got this channel that if you're looking at your overall channel over here, we're really kind of along the top edge of that channel and just kind of playing around up there. And what this does is it tends to create those stronger patterns coming off of the lows where this really starts to look a lot like what we were seeing on the 60-minute time frame and the 30-minute time frame a week or so ago. Let me show you that again so you can see that. So this choppiness that's happening in here, very similar type of action now on our 1,000 tick chart. So I am looking at, the possibility that we are going to continue to see some more tests of these lows in here, but going into kind of midday here, we had really beautiful smaller time frame reversal patterns. So what I'm focusing on is really just playing these smaller trades. And in this case, what we had was a small inverse head and shoulders here. And we get that break in the channel where we get that shift in the momentum. It kind of pops up. And what you want to see is that when you get your channel break and you get your pop, if it can flush out that upper end of that channel. So what that does is it allows for the potential for stronger reversal patterns to play. So even if this came down with strong momentum like this into a previous low and managed to make a new low, the fact that it punctured that high there allows it to form a really strong reversal coming off of this pattern is called a 2B. And when the angle is slower, like it was here this morning, we go into the right shoulder of an inverse head and shoulders, or we call this a phoenix pattern over here. And so that's the pattern that I was playing here this morning. And let me clear this and drop down to some smaller time frames because I want to show you how this really just kind of repeats as well. So the key thing that, we want to see as you're coming into lows are these shifts like this, where it kind of has this leg and then it does this momentum shift. So you get your leg, you get your momentum shifting. And then again, your pops, these can form like these little phoenix patterns. In this case, it was too strong on the upside, so we ended up getting a flush on the low. I call this a momentum reversal plus before we went into our phoenix or our larger right shoulder. But what we like to see within these shoulders are momentum shifts where you're basically getting, again, a lot of times that smaller change in the momentum. So see how we have the leg here? And then we call this the foot, where you get that momentum shift again. And then this congestion is a position building zone. So whenever you have the two waves of selling, you have a higher probability of getting a really strong reversal or pop coming out of that. It might not totally reverse the trend. We've just been focusing on day trades today, but it's something that repeats over and over again. So here you can see again our leg. You can see our shift. And in this case, it's the extreme momentum again, just like what we see over here. So we get the two wave move down and then the shift. So these are kind of the two ways that we've been seeing this playing out over and over again the last couple of weeks. The first pattern is what we call the momentum reversal plus, and it basically takes this flush and takes out all of these people that have all of this kind of hesitation over here, and it flushes them out. You want the two waves, and then the trigger is the channel break. And the other pattern is the one where, again, I took it as we were coming into our class here today. We get the shift, we get the pop with the channel, and then we go into that base. And notice how close this looks to what's happening over here. It's basically just a smaller setup of what we were having on that 1,000 tick time frame. And it's just repeating again. So this again triggers the buy. You can get in early with just the foot break, but you have a risk where if it doesn't go into more of a base, you can get that flush. So you really have to watch that momentum once you're coming out of the foot portion. So if we're coming over here, this is what I was looking at for target zones and doing the wave count 1, 2, and then 3 waves of correction in here. And when this happens, we are almost always guaranteed to see a channel break if we happen to get 3 waves of correction that are about the same size. And a lot of times this move here can be stunted compared to these previous moves. So this is a zone where you start to want to watch for the end of the trend or a reversal coming off of that trend. And so this is a pattern here that we call a 2T, where we get the pullback, we get the pop up, it goes right into that previous high zone. We get a correction kind of midway, and it goes to a slightly higher high, and it creates a trap. And so a lot of times we see these patterns repeating over and over again. So here we have a leg again. Here, this is trying to form that foot again. Momentum at this point, really there's a little bit of a stronger support zone down here than where there is right now. So I would be concerned that it could go and do that 2-wave move, down in here again as a better possibility. But if it goes into more of a congestion zone, that can create that Phoenix buy setup again. So let's go look at some of the other time frames here. So here, this is our Dow, our micro on our Dow. So we're basically looking at the leg up and the shift in here. And so this is kind of trying to offer, potential for that continuation over here. Here's a small version right in here. You get the little shift, the little flush, and then the pop back up again. We saw this on the euro too, on our futures. That was my other trade. I've only had 2 trades here this morning. Again, I tend to be pretty selective in my trades, and I've really been focused on trading this specific pattern here this week. You can see that 2T, by the way, on the NASDAQ down here when you're looking at the 800 tick chart a little bit better because it's coming up. You've got that upper end of the trading channel, and then it creates that trap there. So that's the pattern that we're currently playing. Right here is the support zone. So it's actually pulling down into that level that I told you I would prefer to see things, coming down into. This is the next kind of major level of support in here. But up in the upper right-hand corner, this is my second trade of the day. And it's again, that same thing. You have the stronger momentum. We get our shift. We come up with, in this case, we've got a 2-wave move up that's a little bit on the shallower side. And then it has a 2-wave correction here. So this setup is something I call a shallow Phoenix. And what that means is that when you have a pattern where it has a stronger move here, kind of a slower 2-wave move up here, and then a slower 2-wave like this, it tends to break with stronger momentum than it had over here. And we tend to get much better follow through. So when that gave way, I looked for more than just a measured move here and here on the upside. And the key target level that we look for when we're looking at these kind of momentum shift type of moves like this is we look for where that momentum shift really began. And this is called the ankle. So here's our foot. Here's our leg. The midway zone is the kneecap, and a lot of times that can be really short. So here's a really good example where you see the kneecap is really small. Your hip is up where it broke the channel before. And these are all key levels of resistance as things are coming back up. But when we have this particular pattern, the ankle is your first resistance level. And I'm usually aiming for the hip. Just depends upon what the bigger time frames are doing. I think the main problem traders run into when you're looking at their target levels and not getting enough out of a trade or trying to be too greedy is that they're not really paying attention to what's going on the larger time frame. So we call those larger time frames our king and our queen. So if you're looking at our 5-minute chart here, like we have on the M6E, then our king and our queen would be our 60-minute. And so if we look at our 60-minute time frame, what you can see is that the king is our trend. So we have that 2T pattern. This is the same pattern that we just saw in the NASDAQ off of the highs. And then we've got this tilted two-wave continuation. So normally when we get a continuation like this, it'll look like you have in here. You get your two-wave correction like this. So it'll come up, you'll have your two-wave move like this, and then it will break down. So in this case, we have this portion is right here. This portion is right here, and that's triggering a short. Now we do have a nice two-wave move, and we're right into a T3 support. So this is your hip zone. So it's a really good level of support. Look at how incredibly strong that momentum was going into it. So see what happens over here when we get that strong momentum? It did pop, but it also went back down and did the opposite of the 2T, which is the 2B, and before it was able to flip back over. So when I was long on this morning, looking at this, I'm fighting the queen. I'm fighting that larger time frame momentum. So in something like that, instead of looking at a pure reversal of the trend, I get aggressive and I just take that first initial move of the pop on the smaller time frame instead of looking for things where I'm really just going to be continuing to build into a trend reversal. Over on our Dow, we just had a small setup trigger called an avalanche. Just kind of show this to you really fast here. And go down a bit smaller. So this is coming off of a similar thing where here we end up breaking that channel. So when that forms a reversal pattern after that channel, it has a better chance of trying to turn around. We do have to watch again, what's going on on the king and the queen, but this particular pattern here, this is a little avalanche. I don't think it's positioned well enough to have a really strong reversal yet though, because if we look at our bigger time frames here, look at what's going on here. We just had this break the uptrend, the upside of this channel. So what that tells us is that by breaking that channel here, even though we get setups that are technically short setups, they're going to have a harder time because they're going to be fighting that channel break. And in some cases, you might be able to get some that will go into, a widening up pattern like this. But in other cases, this can just, play around here and really struggle to try to get going. It might end up eventually falling into an inverse head and shoulders. But the thing that we want to watch here really closely is that this channel break and this channel break, even though it broke those channels, this momentum is really extreme. We're not really seeing a bigger shift in momentum here yet on this time frame. So if this were to do something like, for example, where puts in our high here, and then we end up with 3 highs like this, we would call this a false first high. This would shift the momentum enough that we could get something that can create another flush on the downside. It wouldn't even have to put in another base like that. It could just flush down like this, come back down into here, and then try to pop again so that we are getting more of that kind of rounding off going. I'm leaning more towards something like that happening here in the afternoon on the Dow. I think that our current action here is going to be pretty choppy as we go into early afternoon. So it's going to be much more of a scalpers market. But this is a good example of showing you where the king and the queen or those larger time frames are so important, because you might have something that looks like a setup that really goes and turns around. Like if we had this pattern at the end of an uptrend where we already had like 3 major waves of buying and the momentum on this was played out a little bit wider, so it looked more like this. that would be easier to turn that back around. It would be the same pattern as is happening here, but it wouldn't be as stretched out like this. So here's your three highs, here's your two wave up, here's your pullback, there's your little base. So this would have a much higher probability of totally leading to a trend reversal. And oftentimes this will go and do like a 1, 2, 3 and drop really fast like that. So when I'm working with traders and we're looking at, their trades, they might be trading strategies where I say, hey, starting out as a trader, one of the easiest strategies to learn is your Phoenix or your Avalanche. And that can be, for example, your right shoulder in an inverse head and shoulders. It can be your handle of a cup with handles. But you're taking that breakout and you're learning to only focus on that particular strategy, but always putting it into the context of where things are happening in that larger trend. So it's easy to get a kind of oh gosh, microscopic, like too focused on a smaller time frame and looking more at like the little pixels in a painting or in a digital image, and instead of backing up and seeing the whole picture. And the little picture, yeah, myopic. Thank you, tunnel vision. I sometimes lose my words, you guys. But yes, I can always count on Scott to fill it in for me. But you get that myopic or that tunnel vision, and you need to back up and really see, hey, where is this strategy in terms of the larger picture? There's not a right answer as to which larger time frame to go to. What I usually do is if I see a pattern on a smaller time frame, like for example, I see it trying to form an avalanche, I want to go up to a time frame where at least I can see a couple of bigger waves of trends happening. So I don't want to be just looking at a trend where it's only just this uptrend. If that's all I'm seeing on my larger time frame, then I'm not on a big enough time frame to put it into perspective. So that's really crucial. This is still trying to form a type of an avalanche. We call this a megalanche, where it goes, it kind of gives the false setup and then it widens up and tries again. But again, it's still not at great trend placement on that larger time frame. Let's go take a look at some of the other markets here again quick. One thing you'll notice on my charts is I use a combination of line charts and candlestick charts. I don't use any of the new charting styles that have come out over the last decade or so. I'm a little bit old school in that regards. I think the line charts do a really good job of evening out the moves, but a lot of times I need my candlestick charts to offer confirmation on um flush action and making sure that my stop placements are in the correct levels and things like that. So I always want to look at both of them. You'll also notice that I use a combination of time charts as well as tick charts. So I'll have like a 15-second chart, but I'll also look at something like a 200 tick chart. And I kind of have my charts divided where on the left side of my tabs, I've got all my time frame charts. On my right side of my tabs, I've got all of my tick charts. I use more of my time frame charts when I'm trading overnight, the smaller time frame charts, looking for patterns on those. And I use the tick charts more intraday. But I'm always kind of going back and forth and looking at each of them because sometimes things just look a lot cleaner on one than they do the other. By the way, here's another example of that strategy that has been just so common lately, you guys, just over and over and over again. It's really a beautiful one. You just saw that too? Yeah. I haven't been trading these features here a lot. I started doing it more here over the course of the last couple of weeks because it's been having some nice setups in it. The futures contracts or markets that I trade the most are gold, oil, and then the index futures. Primarily the Dow, and then to a lesser degree the NASDAQ and the ES, and then the Russell's kind of the last one. And it's not that the Russell doesn't trade well, it's just like where's my focus? And I try to not be too overwhelmed by the number of securities that I'm looking at. So I keep things up in the background, and as they start to develop into, stronger patterns, then those might become the ones that I focus on for a couple of weeks. I started out as a stock trader, and I got into futures really by following the futures market all day, every day as I was trading stocks. I did a lot of day trading, especially trading gaps. And as I moved around the country, it just wasn't as easy for me to do that. I've had foster kids, I've got my own kids. So you're dealing with getting kids off to schools at the same time the markets are opening. So that was perfectly easy when I lived in Florida and the markets didn't open until I had everybody out the door. But now I'm in Tucson, and so trying to run and get my kid out the door, I can't really do all of the gap trading that I loved to do. And so that just shifted my focus. And the one thing I like about, my style of market analysis and how I trade is that it doesn't matter what market I'm looking at. I'm always looking for similar patterns and similar ideas, and they really translate to every single market, every single time frame. Look at how this is holding that target level, you guys. So when we do have these shifts here, this is that ankle, and that's that first major resistance that you've got to deal with in this reversal pattern. So this is that first major resistance. And what we like to see is more of a brief kind of kneecap type of pause at that ankle zone. So if this is our move down and this is our move for our reversal, here's the ankle. These are our next levels. What you want to see is just like a small little pause here and then offering up the continuation. And that's what's going to lead to some of those bigger trend reversals like you have here where, it makes it all the way back up into our congestion over there. And at that point, these can go and lead into things like Phoenixes where they'll totally turn the market around. In fact, that's exactly what happened in our NASDAQ. I want to show you this NASDAQ chart here. This is just so much fun trading this the other day. Coming off of our lows here on the 8th, was it the 16th, 17th there? So we have that exact same pattern right in here. I'm going to go down to a smaller time frame. So this is the main pattern that I took here. So here's our leg, here's our foot, and then here was that Phoenix. And I took this at a number of levels. I had taken it originally, coming off of the foot, and then I was a little bit, hoping for this to do an earlier move. But our kind of do or die zone is when we're looking at the distance from where the momentum starts to where that low is to where you have similar size. That's your do or die zone that you want for the continuation. So here's that ankle zone, and that's like that main resistance zone that we're looking for. And again, I prefer if it has like the shorter little corrections, but this is where we look for continuation patterns. And in this case, it went into a tilted continuation. We see another version of it up here, but it just kept that trend going. And, this really looked a lot like what we saw this morning in our charts. Here's the 2T. This is the 2T pattern, just like what we had here coming off of that high in the NASDAQ as I was kind of starting my session here. And so what you'll notice is that if this is coming into a major zone of support in the overall market, then that pattern can often go and lead to complete reversals in the market, where you can basically just play every single continuation move. Now, what we want to pay attention to is that if you'll notice, if I connect these lows here, that when it hits like an even spacing over here, it doesn't tap the lower end of that channel. So we want to watch for it to not kind of flush that channel. And that's where we have a higher probability of that continuation. We can also use things like Fibonacci fans, where if we hook up a 76.4% Fib fan support under here, that can serve as a trailing stop level where we don't have to worry about even taking full stops if they don't work out, because we're going to get taken out with that trailing stop. So for example, like this, let's say this is coming up here and we're getting a pullback and we put in a fib fan from here to here and it comes down into our 76.4, but it just can't get going off of it. So our stop would be under that 76.4% fib fan, even though the entry was over here. So you're not waiting for that low to be taken out. So this is a pattern that lends itself really well to doing advanced trade management, where if things are going slower and they're not following through with the momentum, you can get more aggressive with your management. You can even take part off as it's breaking that channel because it should have gone more quickly at that level. So it's a beautiful pattern for newer traders, and it's one that happens a lot in markets where we have a lot of volatility. The question, rounding and the pause just under the previous major high helped push it to a further target. Absolutely. The rounding is really a beautiful pattern for newer traders because it helps flush out all of these people over here. And again, the other way this can form here is this can pop and then go and do a two-wave move like this and flush it out even harder. And then you get your reversal pattern right here. And then that can go into a phoenix or that kind of right shoulder type of level again too, to offer a continuation. So this is one, we really will probably continue to see this working quite well in the markets here in the foreseeable future, just because of where we're at right now. Let's drop down to some smaller time frames. So here again, this is what's going on. So see how it stopped at that first target zone in here, how that kind of paused it right in there. And then here's that second level that we were aiming for, and it's just hitting right now. So here's that 2T reversal again right here. So it got a little choppy as it was coming into there, but that's exactly where it held that congestion. And then you have your two measured moves right into this bigger target. And these were the levels that we were looking at as zones to pause the market before they even hit. And it's because they repeat over and over and over again. So if you're looking at a trend, let's say this is our uptrend here, okay? And we're getting something that's turning around. Our hip zone right here, we call this T3 or target 3, is a major zone of support. There's often things like a phoenix at that level. So here's that shift, the pop and the base. The midway zone, you'll often see a little pause. We call that our kneecap, but sometimes that's not obvious. So like in this example, we don't have that. So we just aim more for that 50% zone. And that's T2. T1 is a channel, and you don't use it if the momentum is really extreme, but if your momentum is slower, it can serve as a zone that can pause a trend, usually because the trend is something where it's a new uptrend, and that T1 or target 1 zone, which is your trend line, is actually serving as support that continues the larger trend. So we don't see that as much in the reversal patterns. But those channel breaks, even from the smaller channels, again, this is a T3 level for that smaller channel, T3, for the bigger channel. Over and over, those channel zones are beautiful for looking at pauses or for target levels. Look at that. It's pausing right at it. I usually aim for the middle of it, which is exactly what it's trying to do right now, is right smack in the middle. If we go down, we might even see that smaller pattern that we've been looking at here. It'll be really tiny though, but it is there. See that? So here's your leg, here's your foot, there's your Phoenix, and there's your buy. Now, usually we get pretty light volume at this zone. So that's one of the key traits to watch for, is for volume to drop off. And as this shift is happening, you want the strongest volume at the start of it, and then you want smaller volume spikes as it continues. So it'll look like this. Here's your move into your shifted lows. So you'll have the biggest volume spike here, lesser, lesser. And so each of those will be the spikes. And then when you're going into your congestion over here, you'll see overall volume declining. And that will trigger the setup. Now, this is a really tiny time frame. You're only on a 2-second chart here. I will trade these if they're at a major support level, like what we see on that larger time frame. I was talking too much, though. I didn't get a chance to see it in time here. Hold on a second while I grab a drink. Live your life 2 seconds at a time. So actually right here, though, this is that kneecap zone here. So your bigger move down here, and then your hip. This is a little bit tricky on this hip because see, you've got this wider channel here, and then you've got a really narrow channel up here. Let me kind of clear these. So what I would be aiming for the hip would be right here. But this is your kneecap. It's your midway zone on your 2 waves down. And this portion here also has a smaller kneecap. It's just we didn't see any reaction off of that one. You can also look at wave count. So we've got a 3 wave count right here. So this is also stalling things a little bit. So this is a really beautiful example of this, live here, of a pattern that we see over and over again. You have the same thing happening right here. It's just that this portion's a little bit tilted. So if you start looking at where the momentum shifted and then over to where it breaks out, you can see that timing there is really good. So same thing here, the start, kind of the low, and then where it breaks out, your timing there is pretty even. And I will take the setups if, let's say, here's our 3 waves down, and here you're coming over again. If you have even spacing here to here to here, I will try this because a lot of times this can pop up, do that second portion over here before it goes. But you have to be aware that if you take this buy setup right here, that what can happen is it could pop, flush, and then go with the bigger time development. So if it pops up, one of the key things to kind of watch for is this move up here. Take that 50% zone. This should soar into 61.8% extension. So if it gets stuck at like 50% or less, that's kind of a heads up. And if it tries to do any sort of a pause here, that's longer than a pause on the upside here, then I'll tend to protect part of my profits because I'll know that it has a possibility of doing a second wave of correction. And I just don't know which way that correction is going to try to play out, because sometimes it can be tilted up like this. Sometimes it can pop up, do that base up there. And sometimes it just doesn't do that second portion. It'll just go straight into the stronger continuation. But that is a risk factor that you have to be aware of. So when it does go out to twice as long, this is a higher probability setup, but you might not make as much on it. And the reason you might not make as much on it is If you're waiting for it to do that second wave, your entry trigger could be higher than where it would be that if you took the first one. So oftentimes if I take this first one, I'll be watching for zones where I might need to take some partials off that I can build in. I do want to see stronger momentum coming out over here. So if you look at this momentum on the downside right here, see how it came out with momentum that's actually stronger? That's really important to see that. If it's having a struggle getting going, then you're more likely to see something that can go and flush to a lower low there. And I'll get more aggressive with the trade management using that channel break there to get me out of the position. So this is one where we could actually get an example of a tilted continuation here where this is trying to play out based upon the bigger patterns here. So if this goes right here, you're looking at pretty even spacing here to here. So this has a chance of trying to go. And if it can't really get going too far, that could go into another base to kind of widen it up here again. So you've got your even spacing here on that time frame too. So this would be something where I would be looking for a potential for a continuation. I would like, again, light volume as this is forming. The lighter that is, the better. So if it's like the lightest of the day, that's usually the best. That's going to give you the strongest continuation. In here, the way this is forming in here, what we want to be aware of is that if we have those kind of like tight back and forth movements, it's easier for it to try to flush the downside move. And what you have to watch for is they can do a little channel like that and then break that channel. That's going to help you with your risk because it changes that momentum to kind of bring those buyers back in after it flushes them out. Ideally, this correction would be about the same amount of time as this correction. So you would see pretty even spacing. Let's look at what those other time frames are showing us. So the nice thing about something like this too is if you're looking at that as an entry point, you can take your smaller channel break there. And if it's not getting the momentum going, you can go ahead and take partials off. I mean, you would have had 10 points already. And so you can then build into your positions. And if it doesn't end up working out, what you're doing is you're looking at your channel for your stop and you would have pretty close to break even. So if this doesn't go when it has like that measured move here to here, what it tries to do often is it can try to double it out. So that means this could go into a much longer range before it tries to go. You kind of think in a fractal nature of things. So see how long this took to shift down here? Well, that took about that same amount of time to pause here and, similar to here. Well, if things go out further than that, then you're looking at doubling those zones. And those can even double again before they might try again. And that's what you've got here. So if I gave this a try, when this didn't keep going right away, I would not have a loss on this trade. I would have a scratch on the trade. Let's look at what it looks like on the bigger time frames though. That's usually where the problem comes in. Yeah, I mean, on our bigger time frames, this is a really difficult zone for a new trade, and that is because you're right in the middle of your trend. So it's really still trying to figure out, hey, am I going to go and put a second wave down? Because we only have one main leg down here. So is it going to try to go ahead and flush? Or is it trying to shift and hold up where it can shift the momentum like this and end up, let me change the color, going like that. And so it's still kind of trying to play out. We're still pretty early in our spacing here and over. So there's still room for this to try to gain momentum. It's just that it couldn't go with that initial do or die point. So your next do or die point is basically looking at like that zone as another do or die point. So halfway zones, then that smaller measured zone. So see how that just kind of, I got it too small here. Let me make it bigger so you can see what I'm talking about. So what we have for do or die zones is, and I'm just going to put in the time extension. So here to here, so basically you're low, and that level here becomes a do or die point, but you want to see this pulling up to about here before it would go into a base there. And you would want your pivot to be before 50% extension. So that's your first, your kind of bigger do or die zone. Your next do or die zone would be your halfway point. And then the one that would be before that would be the halfway point of that, which is your size of your move right here. So you're basically going incrementally bigger and bigger. And then the next one would be to take that out further and double that. So you would be doubling this congestion here, and it would be right about here. Now that one would have a harder time though, because your inverse head and shoulders would be extended out too far. Normally we see this happening when the spacing looks really good on maybe say the tick charts, but the time frame chart goes out really far, or vice versa, just depending upon, you know, the time of the day that you're trading. So one of them can look perfect, but if you look at, like, if this is the time frame chart, maybe your tick chart would look perfect right here, but your time frame chart would look too short or something. So vice versa. I'll look at both of them though. So in this one, since you're going at kind of like that halfway point, it tried the halfway point. This one is the one that tells me, I might go get traps where it needs to put in a second move before it could try to continue. And it could even take out these lows and do it with a megaphone. Now, if you're still within the context of a bigger trading channel on the downside, your risk is that this can still go to a lower low. Or if this is the first break of a trading channel on the downside, you also still risk it going to a lower low because it would be trying to widen up the range on a bigger time frame. And so you would want to treat setups like this more as scalp positions and be more aggressive with them in terms of the management of them. Let's see here. I'm going to back this back up here. So if we take a look at like our 10-minute chart, sure, we've got support here, but there's not been much widening up at all. So if you look at something where we have like comparable impulse moves and you look at like how much things kind of chopped around after those impulse moves, I mean, we could be doing a lot of back and forth in here for a while. So that would want you to keep that with a tighter perspective, focusing more on just those scalp moves and really watching the momentum and the key points when things are breaking out. So if you get a breakout, for example, like what that tried to do just there, what you would look at is if this is your pop, here's your previous move here, mark the halfway point. Take your fib time trend blah 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 price extension from there to there and over and up. Let me put it on here so you can actually visualize what I'm talking about. And I know I'm jumping from like one thing to the next here, but those that follow me every day, it all starts kind of sink in here. So notice that that got stuck at like 50% here. What we need to see to have a better guarantee of it hitting the 100% level up here would be for this to have a smooth move into at least the 61.8%. So if it's getting stuck at 50%, it's going to have a harder time getting to that 100%. It's more likely to get stuck. And so you would want to be more aggressive at taking your partials off at levels like that. So let's see, how about you guys have any questions on like some of the stuff that I look for in my trading? And I'll flip back and forth different time frames. See again here, this is just one wave down. So that puts this at risk where we're kind of in a zone of where it could have tried to do the inverse head and shoulders and popped back up. But with only one wave down, this could just be a two-wave correction that's forming more of a bit of a megaphone in here. And if you look at your upside move and then where this continued, you fell short of that 50% level. This is an initial support level here. Let me clear this. Show you. So this is kind of like your final do or die if it's going to try to break would be right here. So see that fib fan and it's pushing through it. That tells me we're more likely to go ahead and get more selling. This would be a better overall buy setup if it had one more wave of selling over here so that it had, this first wave of selling, then went into the second wave of selling, and then we get your inverse head and shoulders here. When it's only just one wave, you have a potential that it can just continue and do a second move on the downside. So you end up with a trickier level in here. Yes, when you have the two waves, that's when it's easier for it to do a reversal strategy. So one wave, you want to be more aggressive. Two waves, you have a better shot of those reversals actually turning around, whether it does it with like an inverse head and shoulders, or it does it with that shifted momentum and then shoulder, or it does it with the shift and then the flush. All of those have a better chance of turning around if you have at least two main legs down here. And then if you've got, bigger continuation of the trend on the downside, even better, because then you have even larger trend exhaustion. So this is just basically confirming greater weakness here into the afternoon. But you still would have had really good return compared to what your risk was on that initial position. Because look here you do have your two waves down. It's just taking into account what time frame are you playing the position on. And this was right around 760, made it up to above 810. Even on your micros, that's a pretty good move. Let's see what we've got. The other indices or markets looking at. Oh, look at that MC6 M6E or euro there. It held that perfectly right there. So you're just coming into a major support zone right here, right smack in the middle of this. That's going to be your initial support zone to this. And notice that this is the first time this broke that bigger channel too. So this is what we would call a widening up zone. And it can go and do a lot of back and forth action in here. So you could get a lot of the smaller reversal patterns on this on the intraday chart now. I would be looking for them mostly on like a 100 tick. So see what our oil's doing. Oil's kind of rounding on the 20 tick. Let's go way back here. So our 20,000 tick, this puts it with the two waves down and then the shift. And these were your three lows, so it kind of did an extra little flush in here. So this is kind of trying to do where you would have that potential for that reversal, but it has that 2T over here. So my concern on this is that, yes, it offered the original kind of pull up off of our support zone from our kneecap over here, but the ability for it to continue higher is going to be a lot more difficult, because even though we've got a two-wave move down here, that whole bigger move is really one wave. And so sometimes this will go in and it'll actually form like a chevron, and then you'll get a breakdown again because these two waves were so fast on the downside. So I'm a little bit iffy on this in terms of trying to do that as a buy setup in here on the larger time frame. I don't like the trend placement and the rounded highs that you've got going on over here. You can kind of see the shift here a little bit better on the 80,000. See how it comes down? And then we got that shift. So this is certainly a zone for that setup. I was trading it on the long side over here. I didn't hold anything of it, but you know, technically speaking, we could get a continuation, but it didn't break the channel here. And breaking that channel, like kind of pushing up and puncturing it, that is better for getting a better bounce. So I'm still a little bit concerned that this could just go and flush down again based upon this larger time frame here. Let's see the other time frames. We're almost out of time. This is weakening. So here's your Phoenix, and it has the inverse head and shoulders. It had a no touchy here to allow that to bounce, but it couldn't get going off of here. So this is being pretty hesitant. It's basically at a do or die zone. So see how long this took to congest and then how long we are at right now. If this is going to pop, it needs to be doing it like right now. Otherwise, it's going to end up in a much longer zone of congestion. 10-minute chart. Don't really like it too much. I do still think it could flush, but it's not a beautiful setup for it because see, here's your leg and your shift. So it kind of tried to turn around. It just couldn't get the momentum going. So see how it held the ankle? This is why that ankle is so important, because if it doesn't go and flip around, that's your zone that you want to be watching for target. So if it starts coming into that target more gradually instead of just falling into it, you would want to protect most of your position there.